If you own a construction company, most likely you're not making what you should be making or what you thought you were going to be making. So we're gonna break this video down into understanding your overhead, understanding how a P&L works, your process of estimates for pricing. So we're gonna show you how our estimates and invoicings look like, and how to increase the profit margins on every single job that you are working on. And if a client tells you that they got a cheaper quote from somebody else, I'm gonna teach you how to handle that, but a little later on the video. But before anything, we're gonna dive into overhead, because that's where a lot of your profits are going into. Now, overhead is a well-known factor into the business, but not a lot of people know what it actually means or how to break it down. The simple explanation is the cost of your business to run without an actual job breaking down into 30 days. If you own a company, you have a vehicle, insurance, business insurance, LLC costs, licensing costs, fuel, you have paper and ink and all of these other things for your office, you have an estimated amount that you're spending every month just to run as a business. That number could be $2,000, it could be $20,000, it could be $2 million. This is up to the size of your business. But this number has to be charged to the job, not to your profits. In our business, we run at about 12 to 15% overhead cost. What that does is that allows me to put on the job my overhead first, divided on the amount of jobs that I have on that specific month, or the jobs that I'm planning to have by the month, which means my profits are not paying for the overhead, the jobs are. A simple mistake with the overhead is, what do you count as overhead? Your workers are not an overhead expense, they're an actual expense, meaning the jobs pay for the workers, the overhead is paid by the job. That's why we keep it to the specific expenses of the business that happen day to day to run. This overhead cost is added to the cost of a job. Let's do an example. If you're going to do a hot water tank, your cost is 4 hours of labor, a tank, new lines, new hose line, new electrical line, new disconnect, whatever the case might be. Let's say the cost to do the hot water tank is $1,500, and you have a $2,000 overhead that you have to divide in 30 days, meaning 30 jobs. That overhead will turn out to be an extra $250 on that specific job. So now the cost of that job is $1,750, and you have a 45 to a 50% margin on your materials that will bring that hot water tank to a cost of $3,600, with a 35% net profit to you will bring that cost of the hot water tank to a $4,000 number. Something that helped me a lot at the very beginning of business to understand the running costs that I had against what I was building on the jobs is that I started doing P&Ls per job, profits and losses. I started creating a spreadsheet where on every single job, I will line down literally to the fuel that I was spending, the amount of work, the labor that I paid, the cost of the part that I purchased, my time doing it, the time of scoping the work, the time of getting the estimate. Everything got broken down into what did it actually cost me against what did I actually built. When I started doing my P&Ls and I started doing the calculations versus what my overhead was, because I was counting how much fuel I was spending and what my car payment was and dividing the car payment in between the jobs I had at the beginning and all of these things, for almost every month before I hit $250,000 in revenue, I was actually in the tank on almost every job. I was actually at a loss working 14, 16, 18 hours a day, wearing every damn hat because I couldn't hire anybody because I couldn't pay them. At this point is when you start thinking, is this of owning a business or having a construction company worth it? But the reality is that construction has a lot of wealthy people in it, and it's a reason why. You start to learn these systems. When I started making my estimates, you cannot put on your estimate 15% overhead charge. These are numbers that you have to add to your costs, to your actual cost of products. One of them could be marking up your materials. Then you're adding a percentage in there for your running costs. You could start not just increasing what you charge for every single one of your workers, but actually breaking down the math of how many workable hours are there for the amount of people that you have, and then start putting the task in place for amounts of time that things are going to take. Now, this comes with a lot of experience and a lot of know-how, but it's not that complicated. And if you're finding this video so far valuable to you and you wish to talk to me personally and you want to know a little more about how we price our jobs and how do we go through these numbers, join us in our online community where I personally walk you through all of this and how to put it together. We have weekly calls and exclusive content. I'll leave the link in the description. Now, once you start working on your estimate, you have the way the client asks you to do it. A lot of clients will ask you how many screws are you going to use? What's the amount of money spent on these screws? Because I'm not gonna pay for the box to sit on your truck. Or I have a friend who will do that by the square foot by this amount. Or I need you to break down your numbers so where I know exactly where my money is going. Unfortunately, my clients don't run my business, so they don't get to tell me how I do my estimates. The reason why they don't get to do that is because if I run out of money, will they give me more? The answer is no. I price the jobs for the business to stay open. So then you go to the way everybody else does it. This is the way most companies that disappear do their pricing. They try to compare themselves to somebody else's price. They just don't have the deliverables to do it. They break these numbers so closely that they forget about profits while they're trying to make more money. Estimates have to be a simple form. Don't break it down as a full job. Break it down into sections. It's a lot easier to digest for a client to read an estimate that is broken down into sections. We're doing a kitchen. We're doing all of this into a kitchen. We're doing a bathroom, hallway bathroom, where we're leaving the tub. We're doing a master bathroom where we're removing tub and adding a shower. If you explain section by section and you give him a lump sum number, eliminates two things. The comparison with a guy standing at the corner at the Home Depot that will do the job for $1 a square foot with no tools, no knowledge, and no liability. By putting it as a lump sum number, it's not on your hands to remove the number. It's on their client to remove scope from that estimate for the number to come down. Now, if you're going to compete with other companies and the typical thing the client asks you is, I have a guy who can do it for cheaper. But what does that mean and how to handle it? What that means is they don't have somebody else to do the job, but they want to act like they do. Or if they do have another person to do the job, they just know you're better than the other person. It's different ways to attack this. The first one is, let me see their estimate and I'll compare apple to apple what they price against what I price. Now, the apple to apple is companies that will do these walks with unexperienced estimators and an unexperienced person walking the project. They're just trying to get out of there as soon as they can, meaning they're gonna miss a lot of items from the scope that you're actually pricing. When you go to the apple to apple, you're gonna start removing things from your estimate and the other company didn't put on theirs, or they can take the price for what it is since he's not missing any of the tasks that are gonna complete that project. Now, the next one is use the other guy. Once he messes up, you know my number, you know I'll be here for you. That one doesn't hit very well with people, but I only leave that as the last choice or the last resource once they start becoming very naggy about the price. Listen, I choose not to work with people that don't believe what we do is valuable. Clients are not always gonna get what they want because their expectations are way higher for the amount of money they want to spend. Once you created this estimate, it gets a little bit into the legality part of the estimate. You need to inform them from the get-go if you're going to be asking for a deposit, if they're gonna have any penalties for being late on their payments. What is your process for leasing a property? You need to be letting them know about these things of how you proceed with the jobs and how the payments progress are throughout the project. So when they acknowledge the estimate and approve on the job, they also approve into the conditions of their estimate. This serves you for many different reasons. For me, the most important of all is that when a contractor takes a client into litigation or court, even if the client loses and we win the case, it doesn't guarantee that we get paid. So normally I use this documentation so it gets me a little bit farther once you get into that point. I'm not saying that every client is gonna take me there, and I've been lucky enough not to have to go there, but it's always nice to be prepared. Now, this estimate will turn into an invoice. Now, even though I was very vague on my estimate, on my scope of work, once it gets converted into an invoice, that's when I go into details into what I'm doing on every section, which I'm getting paid to do. All the details that I omit on my estimate is because I know what they're gonna do to that estimate. They're just gonna look at the number. And this is how one of our invoices and one of our estimates look like once it's completed on our end. We try to give them as much detail on the invoice because that's what is telling them where their money is going. I'm not telling them how many tiles or how many screws I'm using. What I'm telling them is what areas am I touching, what am I doing to every specific area, what am I getting paid in total for that amount of work. We've been in business for a long time. And we have been able to figure out what actually people read and what they don't. So we stopped wasting time on what people don't look at just because Uncle Bob told me I should put it there. We started creating a system on how to perform our jobs on a better way based off of our invoices. We started to create a better way to price the jobs by knowing our actual numbers on the business and being able to break down our workable hours, the price per workable hour, the price per job that we do on a specific task and a specific square footage. But those are internal numbers. Those are not the numbers we give to the customer. And these allow us to keep our revenue at, after all, to a 32 to 35% profit margins after everything was paid for. And to wrap up, just make sure that you're understanding what your overhead cost is, what your profit margins are, and how you mingle those two together within your estimates and your invoices. And if you find this video interesting and helpful to you, please join us in our community where we'll have weekly calls, exclusive content. You get to speak with me one-on-one. And if you want any more free valuable content like this, subscribe.